oil above $100 met an AI spending revolt, and technology lost. Tesla fell 14.2%. Alphabet lost 6.5%. Defense and healthcare unexpectedly won. This matters because inflation risk and capital spending pressure arrive together. Friday's test is whether QQQ can defend 688 while Brent holds or breaks $100. The S&P 500 closed at 7,407.58, down 1.22%. The Nasdaq Composite ended at 25,137.69, down 2.15%. The Dow closed at 51,711.29, down 0.97%. The Russell 2000 finished at 2,938.57, down 0.72%. That ranking matters. The most expensive technology exposure suffered the deepest loss, while smaller companies held up better than the headline suggested. SPY closed at $738.29, down 1.22% on 41.12 million shares. QQQ closed at $691.96, down 1.90% on 35.31 million shares. SPMO closed at $149.85, down 0.15% on 1.39 million shares. Volume reached 79% of normal in SPY, 83% in QQQ, and 62% in SPMO. The sell-off was serious, but it was not a full-volume liquidation. The session had one coherent conflict. Growth stocks faced two taxes at the same time. The first was energy. Brent settled at $100.69, raising inflation and margin risk. The second was capital spending. Alphabet's quarterly investment nearly doubled to about $45 billion. The 10-year Treasury yield closed at 4.682%, increasing the discount rate on future earnings. The market did not reject artificial intelligence itself. It rejected the combination of expensive infrastructure, delayed payback, and a macro backdrop becoming less forgiving. VIX closed at 19.24, up 15.62% after touching 20.31. The S&P low was 7,375.76, roughly 32 points below the close. That rebound from the low shows buyers appeared, but the volatility jump confirms that protection demand changed materially. No transparent, time-stamped public after-close gamma model was available at the cutoff. Exact gamma flip, call wall, and put wall levels are omitted. Those values are third-party options estimates, not exchange official figures. Tesla fell 14.2% after reporting negative quarterly free cash flow for the first time in more than 2 years. Friday must show support near 315, while a recovery through 342 would reduce immediate pressure. Alphabet lost 6.5% even after strong operating results, because spending nearly doubled and free cash flow turned negative. Lockheed Martin gained 10.4% after raising its full-year forecasts. Thermo Fisher rose about 9% after results beat expectations. The contrast is the whole session. Investors rewarded visible earnings and strategic urgency, but punished open-ended spending promises. Industrials gained about 1.5%, helped by defense strength and Lockheed Martin's forecast increase. The healthcare fund, XLV, rose about 1.2%, supported by Thermo Fisher and defensive demand. The software fund, IGV, fell about 2.1% as yields and capital spending anxiety pressured long-duration valuations. The deeper damage sat in the sectors tied directly to Alphabet and Tesla. Communication services lost about 4.8%. Consumer discretionary fell more than 5%. Leadership was not random. The market preferred current cash generation and strategic protection over distant growth promises. Friday's macro sequence begins at 9:45 a.m. Eastern. Flash services PMI is forecast at 51.2 versus 51.5 previously. Manufacturing PMI is forecast at 53.9 versus 54.4. At 10 a.m., June new home sales are expected at 580,000, down from 606,000. The regular session will also deliver the first full verdict on Intel's results, while HCA reports Friday. But the dominant live variable remains Brent. Another move above 101 can overwhelm otherwise decent company news. The practical map starts with the cash session range. For the S&P 500, support is 7,376, then 7,350. Resistance is 7,408, then 7,450. For SPY, support is 735.21. Resistance begins at the close, 738.29, then 742.56. For QQQ, support is 687.79, then 680. Resistance is 691.96, then 698.66. For SPMO, support is 148.77. Resistance is 151.10. U1, technology selling continues. Validation requires QQQ below 687.79 and VIX above 20.31. The view fails if QQQ clears 698.66, while VIX falls below 18.70. View 2, rotation remains stronger than liquidation. Validation requires SPMO to hold 148.77, while the Russell continues to beat the Nasdaq. The view fails below 147.30 with worsening breadth. View 3, oil controls the index. Validation requires Brent above 100.69 and the S&P below 7,408. The view fails if Brent drops below 98 and the S&P closes above 7,450. Thursday was a cash flow judgment, not proof that the artificial intelligence story is over. The market punished open-ended investment at the same moment oil raised the cost of waiting for future profits. Defense and healthcare provided an escape route, which is why this was rotation as well as risk reduction. Friday's cleanest repair signal is QQQ above 698.66, with Brent back below $100. Failure below 687.79 would keep the technology correction active. Data are through the official U.S. regular session close, for market research only, not investment advice.